Wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello, good morning, everyone. It's a lovely Saturday morning, and thank you all for joining in to our webinar. And today, myself, Loui, will be sharing with you on the market outlook for the second quarter. And the title is War, Inflation, and Interest Rate Hike, Crisis or Opportunity. So I think maybe we can do a poll here, since that we are just to start off to kickstart the webinar. Do you think it is a crisis or do you think it is an opportunity? So we will have a poll soon. Then you can actually click on that. Then later on we can check out the poll. How many people are looking at this as a crisis, or how many people are looking at this as an opportunity. So maybe later, Kay can actually share out the poll, and hopefully that we will get some good surprises from this crisis or opportunity kind of feeling and sentiment out there. Okay, so we have to do this again in the online method. We can't really go out yet for face-to-face. I'm pretty sure that a lot of all of you have been going out, and after this pandemic become endemic, and a lot of the seminars are going into this offline method, which means that face to face. So but right now we're still in the midst of sorting out most of the things, and hopefully that we can meet you all once and again, in every places in different cities. But I mean, if you all wants to have this offline mode, maybe you can feedback to our team as well, so that we can know that how many people are interested into attending face-to-face meeting. Okay, so I think let's start with today's market outlook. I think we don't have this luxury of time to spend 2-3 hours to talk about the market outlook, but we have 1 hour to give you a short and concise kind of market insights, and hopefully that it will be able to help you throughout your trading journey or investing journey. But before we start, just to give you the new user to understand what do we provide, and you can always go into our register through our registration.mplusonline.com. We provide research report, market pulse every day, then latest event schedule on mplusonline.com, and weekly market update. This is done by our team and myself every Monday, 12:30 p.m. That is the usual time for the weekly market update, and we will tell you about some market insights and what are the topics that we select, and what are the sectors that is interested to trade on. Then we also provide weekly bites, which is some market midweek review to tell you about what has happened over the past 2-3 trading days and what will be happening, what is our anticipation expectation. Then watch our platform video guide on YouTube. So please subscribe to our YouTube channel as well. The link is here. And if you need more help, you can contact us through this support at mplusonline.com.my or PM us on Facebook. Okay, so this month we have this Trade Sharia Riyang Raya rebate sebanyak 20 ringgit. So this is actually a collaboration with Bursa Malaysia, and I think to trade Sharia. And first and foremost, you have to sign up and activate your account under Islamic Cash Upfront account from 1st January onwards. Then first 500 eligible clients that trade during this campaign period, the Sharia counters, and you'll be able to get a rebate of a buy brokerage rebate up to 20 ringgit per client via the trading account. So these are the for more information, you can always read the term and conditions. Okay. So before we start, we also have to go through this disclaimer. All these slides that I'm preparing is my view, and you have to do your own homework before. I mean, you also can request to ask about this all this information from your dealers or the investment advisors then before making your own decision. Okay, so today's agenda, okay, is Ukraine, Russia. I think this is a very big topic. Then secondly, it's about the global inflation. Thirdly, it's about Bloomberg Commodity Index. We track what are the commodity prices right now, and whether is it in an alarming zone, or is it an opportunity for us to play around with commodity related counters. And we also look at the dot plot, FOMC dot plot, to see where the interest rate is going and what is the expectation of the FOMCs, or in layman term, what are the expectation that putting out in market to tell where we are going in a very hawkish manner or even in a very dovish manner. So this dot plot will give us an understanding of all this. Okay, and next one is COVID-19 situation, and we'll talk about market outlook, some review, and also some of the strategy that we think it is important in second quarter. Okay, so before we start, how many of you have voted for the crisis or opportunity? Okay, maybe you can share with us the results. Is there any results? Okay, never mind. I think maybe we will wait a bit more. Yeah. Okay, so on this Ukraine and Russia tension, I think it's very important to understand. Okay, I wouldn't say who is right, who is wrong first, but I want to just bring you to the perspective of finance. Ukraine and Russia tension has brought very significant thing for us, whereby most of the commodities related to related to Russia and Ukraine has been going up higher and higher. Okay, so after this war has started, or this tension has started, it gives a war premium or risk premium towards the crude oil, give risk premium towards the wheat or sunflower oil or whatever commodities that is related to necessities commodities. Why is it so? Because when there are tensions, people will sanction them, and people will think about the supply disruption, and therefore people will pay a higher price to secure the commodity, and therefore the tension is still ongoing, and there are still a lot of things happening background. Although you don't really look at the media to say that why today there's no news about Ukraine and Russia tension, but because I think they want to point towards the interest rate hike rather than the Ukraine and Russia tension. So that's why you don't see a lot of news out there recently. Is because I think most of the attention is pointed towards the interest rate hike. So I think back in your mind, you have to understand that this war has not ended yet, this tension has not ended yet, and it will continue until it is being resolved. Okay, but again, people are not really putting a lot of attention to it because the media is also not focusing. It's under the radar right now, to be honest, over the past week. And therefore, once this news is coming up, then I would say that it might be related to the recession news that will be coming. Okay, so what I'm saying here is that right now the media is trying to pinpoint towards the interest rate hike and the hawkishness or the dovishness of the Federal Reserve. But I think sooner or later, when this is unable to resolve, then this will come again at the center stage, and they will link it together with the recession talk. And recession talk right now is also quite vibrant. People are actually talking about recession might be coming. So that could be seen as the next black swan event, or the next anticipated event that may happen. Okay, so Ukraine and this Russia tension has created a lot of commodities being traded in a higher position. But what are the natural resources or the economic activities of Ukraine? That is very important. So I think these are just some of the things that I gathered from online. And uranium ores, titanium ores, manganese ores, iron ores. So mainly, you can see that most of the Ukraine natural resources are first, second place in the world, or even in certain regions. So I think most of these are being traded higher, and because of the potential supply disruption, okay, that might contribute to further escalation, or I mean elevated commodity prices. So if you look at all this, actually they are mainly used in manufacturing sector. So manufacturing sector is also quite I would say that quite risky in the sense that if they can't secure significant or decent amount of bidding material, raw material for their own production, therefore they might incur more losses down the road because things are getting more expensive. If they can't secure and produce the products, then they might fall into the category of losing of their earnings going forward. So other than that, agriculture is very, very important. First in Europe, in terms of the arable land area, which means that they can they can plant a lot of crops. First place in the world for sunflower oil and sunflower. Okay, so these are the these are the very main ingredients of necessity. And fifth place in the wheat, fifth place in the world for honey production. Okay, potatoes and barley production. So they are top five, in most of their crops. So which means that I would say they are very important in terms of your edible necessities. Okay, and corn as well. So agricultural. products. So if you think about this, then you can relate back to why the CPO prices has been going up higher and higher, right? So because of people can't really secure sunflower oil anymore, or they have to secure in a very strong higher price premium towards sunflower oil. They might want to flow towards other oils such as maybe soybean oil, maybe crude palm oil. So that is how people relate all this back towards the CO that we are producing right now. So the other thing is industry ranking. You can see that nuclear plant installed capacity of nuclear plants, seven largest in the world, third largest gas production, iron exporter, rail network length, clay, titanium. All these are top 10 as well. 12th largest steel producer in the world. So they might be affecting um, the situation on the building material parts, whereby steel producers might feel the impact of this because of this Ukraine and Russia tension. Then the products are being trade at higher position, and therefore that if people are using the raw material from as steel as the raw material, then they will impact their earnings. Okay, so besides that, I also want to point out what Russia actually exports: crude petroleum, refined petroleum gas, coal. So basically, they are mainly for this. So you can see that Ukraine is more agricultural products, and Russia is more towards the industrial product. But these two are very strong in terms of the needs for the whole world. So that's why you can see why crude oil is being traded higher, or why this corn, wheat, or even all these crops products are even traded higher in the very recent after the war has tension has started. The all these commodities are being traded higher. Okay, so crude oil, Russia has 11.3 billion barrels a day production in January, according to IEA, and refined oil products. You can all see all this. Yeah, although ranked third among oil producing nations, the IEA says that in terms of oil products, Russia is the world's largest exporter to global markets, and second largest crude oil exporter after the Saudi Arabia. So I think it is very important to note that right now the crude oil is traded higher because they have to price in this risk premium to the Brent oil prices, okay, or oil prices. You just yeah. So what happened if all this Ukraine Russia tension resolve suddenly? Then where is the free falling that it should normalize back? Okay, so let me check back when this has actually break out. Okay, so this has break out. I mean, Ukraine and Russia tension has break out during 22nd, 24th, 22nd to 24th February. So that was the time that people priced in the risk premium. So if this Russian and Ukraine tension has resolved, then it should go back to at least 97 or even lower, because there is no more war. This situation has to come back to normal, and the normalized position will be around the 97 US dollar mark. So I would say that you have to put this in mind, because if you're trading, like for instance hibiscus, then if this is falling back, the sentiment is not giving a premium towards Brent oil, then hibiscus should also fall back, because the sentiment is not there, and you have to follow the sentiment, and therefore Brent oil price falls, hibiscus should also fall. Okay, but again, it doesn't mean that the earnings will fall straight away immediately, because they will need to reflect another 3 months, 3 months, 3 months. So right now it's still very profitable for hibiscus. Doesn't mean that the share price can sustain if the Ukraine Russia tension resolve straight away. So what I want to point out here is that yes, right now it's uptrend intact, but if it resolve down the road, then perhaps you also need to rethink of your portfolio position. Okay. So next thing I want to point out is some other commodities such as wheat. Russia and Ukraine together exported more than a quarter, okay, about 25% or more to the world's wheat, okay, according to Observatory of Economic Complexity. So what this means is that wheat prices are also impacted by this by this um, this tension. and it has started since the 800 mark. Okay, the 800 mark, it went up towards 1004. It pulled back right now. It's stabilizing here. Okay, so right now, um, we are at this sideways ranging mode because there are not much of the news out there to trigger up or down. But like I say, in crude oil prices, if this tension is going to resolve, then everything should fall back towards the very stabilized zone, which is near towards 600 towards 800 zone for wheat. So I guess this is very very self-explanatory, and the other one is the sunflower oil, which Ukraine is the largest exporter, responsible for 46% of sunflower seed and safflower oil production. The second largest producer is Russia. So which means that um, these two add together is very huge in terms of the exports, economic activities towards the world, contribution to world, and therefore you can see sunflower oil has rallied since let me check March. Yeah, so basically they have rallied since this part 1000 about 134 towards 15 ish. Okay, but it is not as huge as this part lah. Okay, this part could be by the driven by the recovery team demand, and you can also look into on CPO price. This also has a very strong rally during this part of the days. Okay, so this is taken from Index Monday. You can also check this yourself. Then it relates back to the super cycle trend of the CPO price. So CPO price is wait, let me check whether I can, yeah. Okay, so CPO price has actually been rallying early on, but it halted near towards the 7,000 2,000 level. Then it pulled back towards the recent phase around 5,780, and then rebounded strongly again. So I believe that right now the CPO price could be going up stronger due to a situation whereby, because the sunflower oil or the Ukraine-Russia tension is not resolved, people has to go abroad to look for either soybean oil or look for the crude palm oil. So therefore, these two oil will give more premium, will put in more premium, and that should position CPO into a higher phase, okay, and higher trend. I would say this super cycle trend will not stop until the Ukraine and Russia tension is being resolved, okay? Because if they are the ones that is contributing to the sunflower oil to the world, if there is not much of the supply of the sunflower oil, then where can they go? So early on, let's say we have only three types of oil for edible usage. Therefore, right now we have taken out one, then we are only left with other two. So yeah, you can also say that peanut oil is also another oil that people can use. But again, once there is something is lesser, then the other will get a more premium role in this situation. So I think CPO price has uh, intention to even go higher. Okay. Other than that, Ukraine and Russia tension also, contribute. Ukraine and Russia also contribute to this agricultural chemicals, whereby they produce a lot of ammonia, urea, ammonium sulfate, ammonium nitrate, phosphate, and also potash. Okay, so all these you need all this to grow your crops. And right now is the phase whereby a lot of people are going into the seeding phase, and we only have this period to seed, uh, plant the trees, plant the crops, and wait for it to harvest down the road. So if there are lesser and lesser of all this nitrogen, phosphate, and potash, then it might affect the crops. And if affecting the crops, then food security is an issue towards the third world country. That is very very important, very crucial for the third world country, and therefore if you look into all this information, you definitely will be able to think what are the stocks that you should be trading. Okay, fertilizer price has been rallying since 2021, but recently it has another spike, even higher towards 237. This is taken from World Bank. It's a weighted average of natural phosphate, rock phosphate, potassium, nitrogenous prices. Okay, so these are elevated, to a five-year high. And I mean, this has been elevating since 2021, but right now it has another spike, all-time high. So basically, it's not good for the farmers, but they have no choices. They have no choice, but just to suck it up and buy a more expensive fertilizers, and therefore they might incur some very significant issue in terms of their earnings going forward. Okay, so all in all, if we look into all these commodity prices, all these supply disruptions, what has it contributed towards? So it has contributed to the very strong commodity or strong super cycle in terms of the commodity. And if you look at the global commodity index, it's the basket of all the commodities. It ramp up together, and you can see that since February, it has been hovering just about 110. It has surged towards 141 before pulling back and rebounding off again to 132 right now. So, in other words, if this Ukraine-Russia tension is not being resolved, then perhaps this commodity will continue to even go higher, and that will come to our next topic later on, which is inflation. Okay, so this is the first part, the Ukraine and Russia tension. So I think, as we have mentioned, war, inflation, and also interest rate hike, crisis of opportunity, or crisis or opportunity. And yeah, Kate, can you bring up the poll if you have the poll? Let's see what what the guy thinks about all this. Yeah. Hopefully your side of connection is all right, because just now you have mentioned some technical issues on your side, right? So what is the poll result for this? Any poll result yet? Okay, seems like there is also another technical issue. Never mind. Okay, yeah, okay. 80% says that it is an opportunity. 20% says that it's crisis. I would say that, yeah, definitely is this kind of situation. But you have to bear in mind, there might be some situation whereby people will price in the recession fear, because someone is asking about inflation is going up. What is the probability of consumer sector to mitigate raw material increase with higher selling prices? Yeah, this is very important. What is the probability that consumer sector can mitigate the raw material prices? I think it depends on how much as a consumer you're willing to pay, first of all. And I think during COVID, people has changed their mindset whereby consumer are willing to pay a lot higher in prices to secure some items, yeah, such as masks, such as gloves and things like that. So right now, even though you know that it's expensive, but you will pay slightly premium to that, even though Grab food is expensive, Shopee food is expensive. Why do you pay for that convenience, right? So people are willing to pay. So I think right now people are more um, they can tolerate with a higher increase in terms of that prices. But there will be a point whereby you will not be paying that for that. Let's say roti canai costs 4 ringgit per piece, and maybe you say, yeah, I might not want to have that roti canai. Yeah, so that is the kind of feeling. So maybe at 2 ringgit I will still pay for it, but at 4 maybe not. Yeah, so that kind of feeling. So once it hits the demand destruction whereby you say no to certain item, that is the point whereby the earnings will fall, because they cannot continue to pass on the raw material cost to the end users. So that's why the probability I can't say too clearly, because I don't have the facts, the data to support. But again, it's about the demand destruction. So it's when they increase until a certain point where you don't feel like you want to pay for that item, then it is sort of a crisis towards that industry. Okay, so it brings us to another topic called the inflation. The CPI numbers, everyone is going up. So I think we can see that during the situation whereby in COVID, we have also we thought that this would be transitory, but later stage, when the before the Ukraine and Russia tension has emerged, actually we have started to see some places falling in terms of the inflation numbers. But after that, when after this situation has came back. We can see that it went up even higher. So overall, you can see that even though uh, uh, even though we are under this scenario, we are still unable to resolve. Even though we are looking at the this after the COVID pandemic has turned into endemic, this situation has not changed. Okay, so perhaps it's the supply side of the things. People are saying supply side of things, and we supply disruption, especially right now. Also another issue whereby the COVID cases in China is also rising, and that also brings a halt to certain industry in China, and that is also another round of supply chain disruption. So I think the global inflation will continue until either COVID ends or either the Russian and Ukraine tension ends. If not, I think things are still quite inflated going forward. Okay, so how do people hedge against inflation? People will say that buy maybe Bitcoin, cryptos and things like that. But the best, I think, if we look at price actions, definitely gold is the one that has been going up higher above the 1008, 1009 towards 2000 since the war period. And then right now we are hanging around the 1974. But I think Bitcoin has actually pulled back, retraced further. But most of the time, people will think about gold as the inflation hedge asset class. So therefore, gold actually going up even higher from this point. So when inflation and also all this happens, and how do they combat? How do central bankers combat or tackle this situation? It is the only way is to um, not to put out hot money and put lesser hot money into the market, and therefore it doesn't inflate most of the prices, or they try to cool down the things out there. So the Federal Reserve dot plot is very important to understand how many times people will how many times the Federal Reserve will increase the rate, and what are the expected or median of the interest rate that they would think it is good for the economy. So in this dot plot, if you look into the FOMC dots median, which means that most of the middle value of the votes out of the officials, the Federal Reserve officials, says that yeah, it should be roughly 1.7, 1.8, 1.9 range for 2022. So which means that right now it's still 0.5, but 0.5%. They need to raise the interest rate until 1.9 or 1.7. Okay, by end of this year, and next year itself it is above the 2.5%, and maintain at 2024, and longer term will be around the ranging around 2.25 to 2.5 level. Okay, so that is the ideal. Okay, that is ideal FOMC projections. Okay, the Federal Reserve projection. So right now, since that we are just 0.5, 0.75 in terms of the U.S. Federal Reserve rates, and therefore, if this continues to hit towards that 1.9, they need to at least increase by another 1.5%. So in other words, the next 6 meetings, or the following 6 meetings, they need to increase by 25% for 6 times until it hits the 1.9. But again, if we are looking at that projection, yes, it's within the expectation, and the market should be able to price in this. But what if the right now they have changed the tone to each of this meeting they will increase by 0.5%? Then that is a game changer to market to the market, because market needs to take in this new information to price into the stock market, and therefore you can see that the pressure has been seen since the some of the officials has been quite bullish or quite hawkish in terms of the interest rate hike, and therefore they have pressure which industry? It is the technology sector. So recently, technology sector has been coming down to a certain point whereby it is quite hard for people to buy into technology stocks and trade higher. Most of the time, it's rally then sell off, rally then sell off. So I think that is the significance of this dot plot or this interest rate hike information towards stock market. So, question. Okay, now the question is when, what if down the road the growth is not that strong, and what if Federal Reserve turn their tone again because they think that there could be a recession that is coming, then they want to slow down the pace of interest rate hike. Then that is also another event that we need to think about, because if they are slowing down from hawkish to less hawkish to dovish, then people might trade back into the stock market and equities will go much higher. Okay, but technical point of view, the three indexes on Wall Street are already below SMA 200. So that is the fact. People are already selling below the SMA 200. So SMA 200 is worldwide known as the mother of all the indicators: moving average, long-term average, 200 moving average, and most of the indices are in below the SMA 200. So therefore, question now is whether people will take technical analysis point of view to sell down further, or people will wait for a hawkish tone change to less hawkish, change to dovish tone of Federal Reserve before they buy into this stock market. So there are two camps right now. Okay, one is the people are already selling below the SMA 200, and that is a negative thing. But what if Federal Reserve change the tone? They foresee that there is a recession, they change the tone and make it happen, whereby they changed from hawkish to dovish, then perhaps that could also save the equities going forward. So right now it's very important to look at the interest rate hike, and especially right now, media is actually putting this emphasis a lot on a hawkish tone, a dovish tone from the Federal Reserve. Then I think this will impact the stock market even more. Okay. Some question I saw in Facebook is market volume is very low. How long do you think the dry season will last, and how much longer will be the market under pressure? I think right now it's also quite coincidentally, which we are going into the May, right? May. So people will say that sell in May and go away. This old adage will continue to come out, prop up in the stock market. So I think right now people are slowing down in terms of volume because of all this sell in May and go away thing, because they anticipate things to happen. But the question is, where do you park your money if this is happening? But where is a more certainty place that you want to park your money? So that's another question that we want to tackle later on. Okay, so how much pressure will how much longer will the market be under pressure? I think it will be depending on what are the sectors that you are looking at. If you are looking at technology, yes, I think they will be hammered down continuously, because right now the sentiment is not correct, not right for them, and we might be looking into slightly sluggish mode of technology stocks going forward. Okay, next we'll bring you to the inverted yield curve. This is also very interesting. Because of the inversion of yield curve, people will talk about recession fear, right? Because I just want to bring you through some of the successful story of inverted yield curve turn into recession. Okay, so this is 2005, 6, 7, 8. Okay, so it happens at the start. This is zero level, right? So it happened at the start maybe start of the year 2006, but the recession happened near towards 2008, after the lemon crisis. Then after 2009, then that was a period for recession. So from the first point that people discovered that yes, it is inverted, people will say that yeah, it might come next 6 to 24 months. So that is a very long period to say that recession will come, right? Because 2006 until 2009, there are opportunities, in the stock market, there are opportunities. So if you are fearing that recession will hit you and you don't, invest in the stock market, then that's wrong. I would say that you have to find some place to park your money, at least maybe in some REITs, or maybe in some places whereby it is resilient enough to, it is so-called recession-proof, kind of areas. I think that is more important, because you say that if recession will be coming in next 6 to 24 months, I'm refraining myself from trading in the stock market, then there is no point for you to, even look at stock market anymore, right? So what I'm here mentioning here is that this part, it happens from 2006 to 2007, and the recession happens in 2008, 2009. So it has a time lag of 2 years, but it happened. Yes, it happened. So next we go into 2019. It happened here. The inverted yield curve happened here, and we had COVID-induced recession in second half of 2020. Yes, it happened. Yeah. So we don't know when, but actually it happened. But if you say that we refrain ourselves from trading the stock market, you will miss out from March 2020 all the way up, all the way up. March 2020 is the COVID outbreak, and stock market breakout, collapsed, and then recovered all the way back, even higher. So I would say that there are always opportunity in the market. And yes, I think 80% of the people has actually mentioned that. But again, right now, it seems like there is an inversion of yield curve recently, last 2 weeks ago, and this might happen, this might not happen, but it might happen maybe 6 to 24 months. I'm not too sure. I can't say that it will happen, but I would just use the technical analysis to put support and resistance for all the trades that I'm using. So just to protect yourself against the recession risk, I think that is the only way to do it. Okay. You look at prices. If people are already selling below certain price range, then I think you should be also selling off. Okay. And especially when things are not getting rosy below SMA 200, then that is a very alarming signal. Okay. So I'm just pointing to you that recession topic will come in on and off in the media down the road for next 2 quarters. Definitely. Okay, this is quite definite that people will talk about recession, and people will point back towards this Ukraine and Russia tension. People point back to the inflation. People point back to the COVID-19 and supply disruption in China, and therefore that is a negative sign for the stock market. Okay, but that is very jittery. That is very jittery in the stock market. Knee-jerk reaction will come on and off in the market. But right now, you can almost see that if inflation would hit the raw material prices, corporates' earnings are down, then earnings will straight away reflect in the share price, right? So that's why it is related. So when inflation hits corporates, raw material prices will go up, and things will go down in terms of their earnings. So that's why that is how people relate the inflation back towards the earnings and back to the share price. Okay, so just try to keep it short for this COVID-19 because I think not many people are going to focus much, especially when everything is going up early on, but right now it's already on a downward path, and I think this is we can consider the end for COVID, and we are looking into endemic phase, and therefore I don't see there is much need to talk about this anymore. But I just want to put in this to just show you that the COVID situation in China is very rampant, and China says that they want to be zero COVID cases in China, and therefore a lot of lockdowns would happen, and right now it's still a lot of asymptomatic kind of cases, and therefore that is allowing the China to lock down several states or several districts, and therefore that could actually impact the supply chain again. During the start of the event of COVID, they have mentioned that they want to lock down until zero cases. That's why right now they are also doing the same thing. If they lock down again, the supply chain would be also one of the matters that people would really think about again. If there is supply disruption, the inflation goes up, and all this manufacturing sector will also again being hit. Okay, so Malaysia COVID cases, I think is down. Ventilated patients and ICU patients are down. Hospital admissions are down. COVID cases are down, despite the testing. Tests conducted is quite high, although it has been coming off. But I think most of the indicators for Malaysia is quite safe. So it's also due to this smooth vaccination progress that allow us to go into endemic after April. So total population, we have hit around at least 2 doses is about 80%. At least 1 doses for adults 18 is near towards 100%. Near towards 100% for 2 doses, and right now we are already going to the children phase. So I think we need not to say much. I think most of our citizens are being protected, population are being protected, and therefore we can have the luxury of going out. Okay, going forward. Okay, so next question is when this is going into endemic phase, but what are the character of most of the population out there? So I just grab out some information. Mobility trends for United States. The retail and recreation is still negative, but they went more to parks, so which means that parks is going up, and also maybe residential is going up as well. So people stay at home still, despite it's considered an endemic. So which means that you can use this to your advantage. What can people buy when they're at home? So it's basically entertainment stuff, TV, gadgets, all these entertainment devices, or they can also buy furniture. So these are the things that you can actually relate to, and it's quite similar in UK as well. Parks went up 53%. Residential still maintained at 7%, but they also go into a supermarket and pharmacy. So pharmacy may have a chance to continue, but all the other things are still down. So basically, what I'm saying here is that these are the trends that you can follow for some investment ideas. Similar trend in Singapore. Parks, there isn't a lot of people going into parks, still negative 23%. I think people are, I mean, Singaporean may be quite conservative and maybe quite kiasu or kiasi. So maybe they don't want to involve in get involved in this situation yet, or COVID complications. But more of them are in the residential area. Okay, similar case, Malaysia and also UK trend. If we can see the pharmacy, supermarket is up 20%. Other than that, is down. Parks are up 10%. Residential is still up 13%. So if you look into all these mobility trends, you can roughly see that more people are at home, they can spend more time, or people can actually buy a home for them to have me time. So I assume in Malaysia case as well, you can see recently there are some property, counters going up. I think they are more related towards me time kind of trading opportunities. So to say that maybe millennials or younger generations wants to buy some places, some units for their me time. So that's why that could be another catalyst for property sectors. So that is what I can think on property sectors. But other than that, if you are talking about residential area, maybe furniture is also good to trade. So that's why you can see that recently the wood-based counters are actually up. Okay, GDP expectation. I think after the COVID year, most of us are down, negative. Only China can survive this incident. And throughout the next 3 years of forecasts, I think most of the people are looking at 1 to 6%, 1 to 6% of range of GDP growth for next 3 years. So I think that is quite all right. But just that right now we have another situation of Ukraine and Russia tension, and COVID cases in China are still rising. Will that impact the GDP growth going forward? So that is another question that we need to think about. I think it is another question mark whereby people are uncertain, and therefore people are not going to price in strongly of these earnings going forward, at least until the COVID case is resolved, or until the Russia tension is being resolved. Okay, so just market review on the main some of the main indices out there. We and also Singapore, these two are key leaders in year-to-date basis. So I'm quite amazed by this situation whereby we are actually beating the rest of the index, and this could be related to because we are defensive in a way, and we are also geographically out of the European region, so we are not in the war zone, and therefore people are putting their money into our stock market. And also you can see that foreigners are actually buying into the stock market recently. Until this week, people have slowly selling off. I think profit taking activities is coming in. So since that right now we are still quite defensive and people view that we are defensive, so I think we should tap along with this advantage that we have right now. Other than that, you can see that Hang Seng Shanghai is down, Kospi and SPX is down. So basically, this is related to technology sell down. Hang Seng is below. Hang Seng is also related to China. All these policies changes and the clamp down of corporates in China as well. So all these are being impacted. So, but outside, Singapore and also KLCI is quite strong and resilient for now. So key leaders in the market, we can see that foundation, construction, and energy, these are the three. Out of these three, two are related to commodity, and construction is related to potentially the GE15. So later on, I'll talk about the GE15. I think it's one of the best catalysts for Malaysia for now, because after the COVID, we have recovery team. Recovery team is already there, but the next best catalyst might be this GE15. Okay, so key laggards, you can see that telco, media, technology, healthcare are those that being sell off. Technologies related to sell off in Nasdaq, and Hang Seng also sell off, and also related to all these technology giants out there. Healthcare is basically after COVID ended, there is no more the premium that we need to pay for the healthcare, but healthcare might be good for long-term holding. So that is just what I'm trying to portray here. Okay, I shall not go through all this. I'm just referring the I think I can share these slides out. You can ask from our colleagues. Okay, but I just want to just share it to you. Just to give you an idea, what are the PE multiples that MSCI World Index is trading at. Right now, it's fairly valued. Long-term PE is about 20. Right now, it's trading at 19.6. In S&P 500 is trading at 10-year average is 20. It is still fairly expensive, 22.6, 10% expensive. And Malaysia is in a discount position actually. So that's why we are more defensive in that nature of valuation. And also we are out of the war zone. And we have the two oils that related to us that has been elevated, the crude palm oil and also the crude oil. So right now we are trading at 15.8 versus the long-term PE, 10-year PE of 17.6. So in terms of technical analysis, we are still being resisted around the 1600 level, unable to pass and convincingly. Recently, there are still some sell-off. I think this might need to wait until some sort of improvement in terms of is either business sentiment, recovery team, or I think the GE15 might be another trigger towards the stock market. Small cap is actually also on a pullback mode, but still maintaining uptrend because it has recently break out above the 16450, and I think it can maintain the uptrend maybe towards around the resistance point here, 17,200 points. Okay. Ace market, I think you try to avoid, but you can be selective within the Ace market. I would say that within this this section, it might be a sideways consolidation and then breakout. If there's a breakout above 5,008, 5,009, then perhaps 6,003 is another target. But I think Ace market earnings are very volatile, and they are being propped up last 2 years because of some healthcare stocks within the Ace market. And so right now, I don't think there is a very significant strong move that is emerging in the Ace market. I think it is more on the lower or negative side of things. Okay, this is very important because US dollar MRR trend is the last piece of puzzle that I need to form in terms of a thesis of where we should be putting some our money in. Because if the US dollar MRR trend is going to weakening path, then you might want to put more stuff into export related counters, which is furniture, gloves, and all this. Maybe technology, but technology sentiment are still quite negative in that sense because the Nasdaq is tech giants are still there. FOMC meeting is still quite hawkish, so therefore technology might not be a good place to put in. But for most of the export-related industry, I think that could be beneficiary. So if this US dollar MRR trend is going to break out above the 425 per US dollar trend, next target will be around 4.36. So when we are saying that breakout here means our ringgit is on a weakening bias tone. Okay, so that you have to bear in mind. So it seems like there is an ascending triangle here. So perhaps there might be an opportunity to see this breaking out briefly above 425, and that maybe people will try to translate it to export trades. Okay, export position, export portfolio. Okay, so strategy. Coming back to our strategy is very important. I just want to briefly go through. We are going to endemic phase, and therefore reopening of travel borders will spur activities in the tourism, aviation, airports, consumer segment. That is quite definite. Secondly is that we are anticipating GE15 to come in, and hopefully that rally, pre-election rally on construction and also building materials, which actually has started and the ASP of cement and steel products are actually on the rise. And awaiting 5G rollouts, these are mainly things that are ongoing. 5G rollouts, 5G coverage should hit 80% for many places, and the expansion of these broadband services as well. And commodity cycle is the one that you shouldn't miss. Okay, you shouldn't miss, because we are going to expect, definitely earnings will be very strong for plantation and also selected oil and gas counters. So therefore, I think we should be focusing on this commodity related counters. Technology turn attractive, but I think you need to ride out the trend, ride out this volatility. You can't go away, because if the FOMC is going to be more hawkish, if the inflationary pressure is going to be ongoing, therefore technology sector will be continuing to stay at least in the consolidation phase or even slightly lower. So you have to ride through this trend. But again, I want to paint another picture to you that for technology sector, it's always going through a cycle, okay? But throughout the bigger picture, let's say 100 years down the road, what do you think about technology sector? That is the only question, because technology sector will not stop evolving. Means that human being will continue to enhance further in terms of technology, and therefore that should translate to this down cycle as an opportunity to buy in for a higher position. So which means that if human continue to enhance further in terms of technology, then technology sector will continue to grow for another 50 or even 100 years, because human will not stop inventing new products. So that's why technology sector will ride out this downward cycle towards new high in the next maybe 5-10 years down the road. So that is what I'm trying to say. And technology sector is turning more attractive at this point, because some are down 50-60%, some are down 40%. So I think it is quite worthwhile to enter for a long-term position. So like I said earlier on, growth sectors might be in a very good positioning for decent dividend yield and rising standards of healthcare in emerging economies, growing expenditure in various countries, and things like that. So the valuations might be attractive, because ASP might not go back to pre-COVID level. So that's why if this is the case, then they have a new normal earnings, and the dividend yield will be based on new normal earnings. So that's why you can see that most of the companies are able to pay higher dividend yields, and that should translate to a good position of a dividend yield counter instead of a growth counter. Okay, so stock picks, I think this has been in our report in early April. We have transport and logistics, airport, capital A, finance related ELK data, MBSB, 5G related OCK Opcom, construction sector, we have AME, Econ, Berhad, Jax, plastic related, PP Plastic, Genotech, Great Tech, KGB revenue under the technology stocks. Healthcare, we have Hata and Scomnet, plantation, we have Kim Long, oil and gas, we have Hibiscus and Pentec. So these are some of the 10 companies that I've put in the report. And actually, in my report early April, we have already mentioned, if you have buy the whole basket since the opening of the report day, right now your portfolio should be up by 2.5%. So that is the rough estimate of over the past 2 weeks. What is the range of upside that you are able to get if you buy a whole basket of our stocks, okay, together. Okay, so generally, I just bring you out with some trading catalysts out there before you go into the Q&A section. I just want to mention a few highlights of these companies that I present to you. Okay, airport is related to reopening of international borders, and therefore they are managing around 39 airports. So if the tourist traffic flow is going up, therefore they will benefit in terms of this structure. I believe that most of your friends are going out for traveling right now, so tourism industry definitely will get rekindled. Revenge traveling, all these people haven't been traveling out, so they can also benefit out of airport will benefit out of this incident events. And I think yesterday, a few days ago, these earnings also went up because people say that people renew more passports recently, and therefore these earnings should be able to get more in terms of contracts and things like that. So that are just some of the catalysts out there. Okay, Econ Pal, I'm just banking on the upcycle of the construction, first of all. Secondly is that GE15 is coming, definitely coming, because it's a matter of when. Okay, I'm not too sure whether it's second half this year or first half next year, but definitely by June, July next year, the parliament has to be resolved. So they can resolve after the MOU or they can resolve after that. But the timeline is quite sure. Over the next 1 year, we will have GE15. And secondly is after this Gamuda, Litra, KPS, I mean, government has been offering them on this highway. My expectation is that if they are willing to buy up these highways, what are the next cost of what are the next actions that you think that government would do? Maybe I would say that they might they already said no hike in the next a few years on toll rates. But they can actually do another more populist measure to say that I even go down to reduce the toll rate for the general population of Malaysia that is using the highway. That is more populist measure, and I think that could be also the timeline. When they have bought highway right now, then the deal will end in May. Then maybe there's some consolidation. Then down the road they say that, oh yeah, maybe we want to reduce the toll rates, and that could be also the prelude towards the G15. And all this is within the time frame of next 1 year. So I think that is also another good catalyst that people should tap along. And especially right now, most of the building materials are also going up, which means that it is either demand going up or supply disruption, right? So these are the two things that contribute to ASP going up. So I assume that right now demand is going up because after 2 years of COVID, right now everyone is starting again on their ongoing projects. So EconPower is a contractor. They might get hit. Okay, I'm saying here they might get hit by the raw material price because steel and also cement price are high. So they might get hit, but sentiment will change the tone when they say that right now is already the peak for the building material cost. So moving forward, it is only downward hill, right? They can also put it in that manner. Downward hill for the building materials, and therefore you should buy into the construction sector to expect earnings to recover going forward next 1 year. So that could be also another narrative for people to use for the econ power situation or contractors per se. Okay, so so to give you an understanding here is that sentiment might be good for contractors or construction sector, but it might not turn into earnings yet. Okay, because the elevated raw material price. Yeah, so OCK riding on the 5G rally, 5G rollout, and they have just successfully roll out the DNB, and also the telcos are supposed to have 70% stake in that, SWN, single wholesale network. And therefore, that is the prelude of things to happen for 5G. But right now, there isn't any, significant progress yet. But soon, we will see some good rollout and also good contracts to be dished out very soon for for 5G. I'm not saying that OCK will get it, but again, when the contracts are started to flow out, then perhaps the telco sector will actually start to revive again. Okay. Jack's also related to construction sector, but they have another business which is in Vietnam, the power plant, and that should be able to generate them long-term bottom line, long-term contribution towards their bottom line, and that should mitigate out the risk of construction sector. The construction order book right now is 245, and tender book is around 4 billion. So I think it's about right when all this GE15 related sentiment is coming back. Construction order book may boost up by whatever they are bidding in their tender book, and therefore that should translate to maybe potential rally in their share price or maybe potential earnings going forward. So let's see how this pan out. But again, they are very strong focus in the power plant, and also they are also expansioning into the renewable energy sector. Okay. So KGB is a proxy towards technology. I put in this is because I believe that they have been coming down quite significantly from 178, 179 area towards around the 1 ringgit and 15. So that is about 60%, disappearing from this technology sell down. So I think it is quite worthwhile to look at it from a long-term perspective. And they are just, able, they are able to get order book record since last year. So therefore, I'm just basing on their technicalities of their company's execution is very good, And in terms of global semiconductor sales are also rising, and therefore there is no stop. Even in under COVID situation or whatever it is, the situation on the semiconductor is still rising. So therefore, in my view, technology sector will be very long lasting throughout another 50 or 100 years, because human will not stop advancing in terms of their technological enhancement. Okay. So another one is ELK Desa. ELK Desa, it is more stable bottom line growth. Despite the COVID pandemic has affected them, their increase in terms of the high purchase is also continuing. So they manage to continue to survive through or under this pandemic situation. Although they have briefly breakthrough or violated our support, but it quickly reversed back. I think the volume are not significant here, and basically they are able to provide around 4.5 to 5.5% of dividend yield, and that is what I'm looking at in terms of a very stable company, and they are very undervalued as compared to the RCE Capital or even Aeon Credit, which is average at 1.8 times. They are around 0.9 times. So I think that is a very good in terms of valuation for them. Hata Lega, I think need not to say much. Everyone knows about the glove companies. I think right now the glove demand is still strong, given that the earlier phase, people are saying that per capita usage is very low. Right now, they are increasing. Rising hygiene awareness, I think rising healthcare standards will also bring up the demand for gloves. Although there are a lot of glove companies upcoming, but I think the ASP is not dropping below the pre-COVID levels, and that is a good sign that even after all the supply is in, but their ASP is still quite stable. Okay. BB Plastic, I think this need not to say much. I think plastic industry is a very strong, resilient industry that under this COVID environment, under this hygiene environment, people will use more plastic, definitely. More takeaways, food delivery, more industrial items that being shipped out also needs a lot of plastics. So the more you buy e-commerce items, the more plastic that we need to use. So BB Plastic is under the plastic packaging, and they are also expanding since last year. Despite COVID, the pandemic, they have been managed to made a very good progress in terms of their earnings, and they pay out more dividends. So I think despite the crude oil is at higher position, I think the clients are willing to pay for the price change on their products. So BB Plastic will be ongoing, tagging along with the recovery team, tagging along with the hygiene team, tagging along with the recovery in industrial items being shipped out, or e-commerce items or food delivery. All these are going to benefit plastic industry and packaging industry as a whole. Okay. Kim Long is one of the company that we covered, and Kim Long is also having some very, very strong extraction rate, superior towards their average peers, whereby they extracted around 21%, as compared to other players, it's about 20%. So it is superior in that sense. Okay, they are also expanding in terms of their acquisition in terms of land. They are able to expand their production capacity as well, and the labor shortages issue should alleviate once. Right now they are already opening the borders. Sooner or later, they will get more labor issues. I mean labor to come and harvest their crops going forward. So that's why I think under this super cycle boom, you can see the average price. The purple color is the average price. You can see that every month it is going higher and higher. And this January, February, and March will translate to earnings in May. Okay, so if the earnings of this part of the period quarter is higher than whatever previous quarters, therefore they would have record earnings. So that is how I look at that. So CPO price is at all-time high region, may trade ahead of the earnings. So my suggestion is that to trade ahead of earnings and sell after earnings. That is, I think, one of the very good strategy that have been using under the plantation sector. So investors also may hold for dividends, because there will be a windfall profit for them, and that should translate to potential higher dividends for them. Okay. So last counter will be Pantech. Pantech is related to oil and gas piping, or whatever pipings that are related to. I think they have many other businesses, clientele as well. Not only the oil and gas sector, but they have maybe under the CPO related sectors as well. So all in all, they are one stop center for piping products, and they are leveraging on also the Petronas initiative. The capex, annual capex, outstanding order book is at 550, which is able to cover them for at least another year. And you understand that when they are selling their products, it is steel related products, that is also an uptrending tone in terms of the ASP price. So which means that under this environment, they are also benefiting because steel prices are going up. So they sell steel piping products for this very niche industry. They are also benefiting out of that situation. So the earnings should be jumping, leaping from this quarter to quarter basis. Okay, so I guess that would be to sum up my my webinar for today. I think we can say that war, inflation, and also interest rate hike, there will be crisis. Okay, but we are always able to find opportunities, such as under this commodity cycle boom, under Malaysia very defensive nature, we are away from the war zone. We are slightly cheaper in terms of their valuations, FBM KLCL valuations. Under the 1 year period towards the G15, that could be also another catalyst. So we can just track out all these catalysts that I mentioned early on. I think it's very worthwhile to look at that, because I don't think that you should be fearful about recession, because if you're fearful about recession, you might miss out in a lot of things. And I think you should stay invested in the correct sector and cut loss when you are needed to cut loss. Okay, so that is the whole idea here. So I guess I will take some Q&A, some questions that being posted early on. Market crash, I think if there is any market crash, everything would suffer. But what I'm going to say here is that you have to have a strategy or a plan before you roll out. You trade the strategy, you trade the stock market, and especially when you have put in a certain amount of risk you have to cut, then you just use that as the plan to cut loss. Okay. Wood-based counters are raw material, especially lumber, will it profits lower their profit, hence lower price? Okay, the way I look at it is lumber price has been rallying since the COVID year, right? COVID year. So if they are impacted, they are already impacted in that manner throughout the past 1 year. And right now it's stabilized around the very elevated area. Then secondly is that they are benefiting out of this export exchange rate. So when our ringgit Malaysia is on the weakening bias tone, we should be able to get more US dollar. Get more ringgit Malaysia once you transacted in the US dollar manner, right? So some of the lumber may also bought from the US. So there is some natural hedging. If they buy from Malaysia and sell in US, it is even more benefiting to them. So that is what I want to point out in that sense. Okay, so I would say that their profit are quite resilient, and they are able to sell it back at a higher price because demand is there. Like I said earlier on, COVID era, after COVID era, people has changed in terms of their behavior. So like people might want to stay at home more, so they might want to get more entertainment devices. They might want to get more comfortable sofas, furniture products, all these dining sets and things like that. Okay, what do you advise to those who have already stuck in tech stocks, the good fundamental companies? We see car sales in the US are still good, especially EV related. Do you see tech will become like those stocks if CPI keeps increasing? Okay, so my view is, again, technology stock is not a commodity. That is my view. Okay, when you are in a commodity like glove, you will be bound by all this fluctuation. Yes. Okay. So right now, the sell down in the technology stocks is not because of the earnings not good. Okay, they are because they are re-rated because the Federal Reserve is being more hawkish in terms of their interest rate hike, and therefore people are selling down because of this, because they are growth stocks. So when you have a stronger, you have a higher interest rate, then that would they are not good for technology stocks, growth stocks. So basically, these are being hammered down because of the event of the Federal Reserve being more hawkish. But earnings are still intact. So as long as they are still having earnings and growing earnings, I think it is quite safe to say that you can buy on them on a longer term basis, such as 3 to 5 years term, because it is very attractive when they have down by maybe 30, 40 to 60%. So if you buy it right now, you are getting a discounted stock, but their earnings are strong. and you can say that the FOMC's interest rate cycle is also a very cyclical thing. So it will change down the road. If recession theme is coming, then the interest rate hike is going down, then technology stocks will go back up. So I think it is very cyclical, and we have to look at the bigger picture. 3 to 5 years, or even 10 years, or even 20 years for technology is still quite, I think, quite solid, because, like I said earlier on, human will not stop advancing in terms of their technology products, and therefore that is a very good sign that if we can continue to advance and enhance further in terms of technology, therefore our industry in Malaysia will still be safe. And next thing is that even you can say that those companies are in downward trend, but if they are tapping along with China investment, so for instance, some companies in Malaysia are already opening up, expansioning into the China region. That is also another path to get more earnings, because China said that they want to make in China by 2025, right? So right now it's 2022, and therefore there are 3 years for them to expand and 3 years to reap the profits out of this situation here. So investment is going to be made in China. Those companies will be able to survive even stronger earnings. Okay, so I think some of the companies like QES, Unisem, MPI, all these are companies in Malaysia, but they have some footprints in China, so that it will be benefiting them. So I think if CPI keeps increasing, yes, technology will have to suffer some low cycle, but when it reverses, when the inflation comes down, then things will get back into action, and the share price will continue to rise again further. Okay, will the US interest rate hike crash the tech sector that I just mentioned here? I think it's related to inflation high, interest rate will go high, and tech will come down. But tech has already came down for 30-40%. So I think it is quite a good significant place to maybe buy in batches. Buy in batches to say that you buy one portion here, if they can go down further, but their earnings are still intact. I think it's no issue. There isn't any issue, because when the share price comes down, but they can generate higher earnings, which means that PE is low, and I think people will still favor to buy them. Although they might not re-rate back to the previous multiple of PE 30 times, but at least if they are trading at around 10 times, they can trade to 15 times. It's also good, decent money, 50% increase. Okay. So I don't see any more questions here. I will ask last question. If you favor to if you want the our new market outlook to be more face to face and not only webinar, maybe we can reflect this to the management and or the colleagues, my colleagues, and they will tell me, maybe more prefer to be in face to face talk in maybe Penang region or Ipoh or even Malacca or even JB or even KL. Then maybe we can do that in the future, but we need to get more consensus and more understanding from more feedback from the crowd. And if you're like this event online, then you also can reflect this. I like this event online. Then you can always feedback to our management. Then we will decide then where we want to go for the market outlook. Okay, so today this is my session for 1 hour and 15 minutes talk on the market outlook. Hopefully that you're able to capture what my essence here on the second quarter outlook. And bear in mind, the recession risk is not out of the woods, and I'm not saying that we will get a market crash, but again, when inversion of yield curve, they might happen in the next 6 to 24 months, although it's very long. But I would say that the only manageable position is your own position with a strategy, with a plan, to say that if it is dropping below certain range, I have to cut loss. If it is heading to a certain level of TP, then I have to take profit. So those are the plans that you need to be intact. So don't worry about recession, because it is always a cycle. And once after recession, it might go even higher. Like in 2009, there is a recession, but those are the times whereby it recovers the most strongly in terms of the equities market. Same goes to when there is a crisis in COVID-19 year, March 2020. The share price of most of the companies rallied from the bottom at least 100%, 200% towards the highest range of position. So I think that is more important. So when crisis, you can use it as an opportunity. I think that is worthwhile to look at as a good strategy. Okay, so I think that will be it for today. Thank you so much for tuning in. For those that is having pause right now, stay safe and go for a uh, very good puasa, buka puasa later on. And for those that trading in the stock market, and I hope that you all will make more money. Hope you get rich, and under this environment and under this situation. Thank you so much. Thank you for your time, and hope to see you again in our next webinar. Thank you. Bye bye.